Hey there, future business mogul. Ever heard of a holding company? No, it's not some secret club where billionaires meet to plot their world domination, though that would be cool. It's actually a powerful tool that can help you protect your assets, optimize your taxes, and build wealth, all while giving you more control over your business empire. And if you're wondering whether you should set one up, how to use it, or when to transition it to an S-Corp, then this video is for you. Grab a pen, take notes, and let's dive in because this is one of those business strategies that can take you from small business owner to serious investor with the right know-how. Ready? Let's go. Alright, let's kick things off with the basics. What the heck is a holding company? At its core, a holding company is a business entity that owns and controls other companies, known as subsidiaries, but doesn't actively engage in day-to-day operations or provide services. Think of it as the parent company of a group of businesses. The holding company might own assets, stocks, or even real estate, but its job is to hold on to those things and manage them for financial gain. For example, let's say you own two businesses, a tech company and a real estate agency. Rather than having separate entities for each business, you can set up a holding company that owns both of them. That way, you can have one entity that manages everything, which makes administration and tax filing a whole lot easier. And who doesn't want easier business management? Now you might be wondering, why on earth would I need a holding company? Isn't that just another layer of complexity? Well, let me tell you, there are serious benefits to having one. And I'm not just talking about the ability to use cool words like subsidiary in meetings. First and foremost, asset protection. A holding company can help protect your assets. If one of your businesses gets sued or faces financial troubles, the holding company structure can prevent the other businesses from being impacted. Basically, you're keeping your financial eggs in separate baskets, and we all know how important that is. Next up, tax benefits. A holding company can allow for tax consolidation. This means you might be able to use losses from one business to offset gains in another. So if one subsidiary is struggling, it could reduce the tax burden of your other successful businesses. It's like having a financial safety net, and who doesn't want that? Now, I'm not saying you should throw all your savings into a holding company just yet, but having the right structure can give you some serious tax advantages. Another major benefit is simplified ownership and control. By having a holding company, you can consolidate multiple business interests into one easy-to-manage structure. You can have total control of several businesses without having to micromanage every little thing. It's like being the conductor of an orchestra. You're in charge, but you don't need to play every instrument. And if you're thinking ahead to the next generation, a holding company makes estate planning and succession a breeze. If you want to pass down your business empire, it's much easier to transfer ownership of a holding company than to sell or transfer shares in multiple separate businesses. Now that you know why a holding company is so valuable, let's talk about how to use one. It's not just about owning companies. It's about strategically using that structure to maximize your wealth. Here are some use cases that might surprise you. One way to use a holding company is by pooling your investments. Imagine if you have several rental properties, stocks, or bonds. Rather than holding them in different accounts, you can put them under one umbrella, simplifying management and reducing individual risk. Let's say you own some valuable intellectual property, like a trademark, patent, or technology. A holding company can own those IP assets while other companies in your portfolio use them. This allows you to protect the intellectual property while generating income through licensing. Here's another cool thing. A holding company can make it easier to acquire other businesses. Instead of setting up separate legal structures for each acquisition, you can simply add the new company as a subsidiary. This makes your business empire grow smoothly and efficiently. Alright, I know what you're really wondering. When is it time to transition a holding company to an S-Corp? Is it worth the hassle? And what the heck is an S-Corp? Well, let's clear that up right now. An S-Corporation is a special tax designation that allows business owners to avoid double taxation. In other words, it's a way to structure your company so that your income passes through to your personal tax return. This means that instead of paying corporate taxes and then personal taxes, You just pay taxes on your personal income, which can save you a lot of money. So when should you consider making the switch? Here are a few signs that it might be the right time. Your holding company is profitable. If your holding company is making significant profits, an S-Corp could help you save on taxes by avoiding double taxation. You're ready to take distributions? S-Corp are a great structure if you plan on taking distributions from your holding company rather than drawing a salary. You want to reduce self-employment taxes. As an S-Corp, you can save on self-employment taxes, which is a major benefit if you're actively involved in the business. To make the transition to an S-Corp, you'll need to file IRS Form 2553. This is how you elect your holding company to become an S-Corp. Meet eligibility requirements. Make sure your holding company meets the IRS requirements for S-Corp status, like having less than 100 shareholders. Consult a tax advisor, because let's face it, tax laws are confusing. Don't go it alone. Get a professional to guide you through the process. All right, now that we've covered all the ins and outs of holding companies, let's wrap it up. Should you set one up? If you're looking to build wealth, protect your assets, and optimize your tax strategy, then yes, a holding company could be a fantastic tool for your business portfolio. And remember, if you ever get to the point where you're bringing in profits and looking for tax efficiency, consider transitioning it to an S-Corp. It could make a world of difference. All right, now that you've got the inside scoop, don't just keep this info to yourself. Share this video with your fellow entrepreneurs and business owners. Because we all need to be on the cutting edge of financial strategies like holding companies. And hey, while you're at it, hit that subscribe button so you don't miss out on future wealth building tips. Take care and keep growing your empire.